All right, we are back for another Friday financial wrap up with Mr. Michael Zuber. How are you, Michael?
I'm doing really well, man. It's never boring. There's always so much to talk about. We have a long list of things and then we net it down to a few. But yeah, this week was no different. Pretty crazy.
It is a wild ride, man. 2023. I can't believe we're almost halfway there. This is for June the 23rd, 2023. Let's get right into it. The UK surprise move. What's going on in the UK with housing and what, just kind of break it down. What's going on? What's the madness over there?
Yeah. So the UK Central Bank went ahead and had a surprise 50 basis point move Thursday. And there's a couple of things. Let's bring it home first, and then we'll talk about what happens in the UK. It was a surprise move, not expected by the market. So what does that mean? That means that our bonds likely get soft or weaker, they call it. And bonds are one of those weird things. When the bond or the asset gets weaker, rates go up. So you should expect that rates go up today, and maybe even have some follow through. And that's just when a surprise move like this happens. It's a worldwide, market, and I would expect the U.S. bond market, the rates go up and value goes down. So that's what happens here, and that's going to impact mortgage rates here. But in the UK, I've been reading for about the last month, Ty, that their real estate market's in trouble. Their real estate market, residential, doesn't have predominantly 30-year fixed rate mortgage. And they've unfortunately been having rising rates now, another 50 basis points. They're at 5%. And earlier in the week, I was reading about 15% of landlords, it was estimated, would be forced to sell because their property is no longer cash flow, right? The debt service went up. They got to sell because they don't want to have an alligator, as I've called it, in one rental at a time. Now, Ty, with this 50 basis point move, it certainly doesn't get better, right? What was 15% maybe now is 25%. So that's the landlords. But let's also go to the homeowners, right? The homeowners, unfortunately, in the UK also do not predominantly have 30-year fixed rate debt, and they are seeing their mortgage payments go up, which is crushing their discretionary income. For example, if your payment was $1,500 and now it's $2,100, that is $600 in discretionary money that's not going elsewhere. And if you happen to be house burdened and you were at 48% DTI, debt to income, before the $600 increase, you're in a world of trouble. So unfortunately, I don't have good news. I don't know how the UK, unless they do extended pretend or some kind of bailout, I don't know how a housing crash, a legit housing crash the dominoes just don't start falling, much like our crisis, right? Once it fell, the values pulled other values, and it was pain on pain on pain. Again, if we bring it back here, the best analogy today in the US is our commercial market. Commercial market, as we've talked about, doesn't have 30-year fixed rate debt. And we have assets being traded at ridiculous prices and values being reset. So there's a lot of pain in real estate markets that do not have 30-year fixed rate debt, i.e. US commercial and the UK and Canada and some other markets. But yeah, it's the surprising move will impact us here in the States, no doubt, but it really be felt by the folks in the UK, unfortunately.
Very interesting times. And was the 50 basis points in the UK was a complete surprise, was not anticipated, much like a lot of our rate hikes with the Fed. There was a lot of anticipation. People thought 25 basis points, we got 25. And it was kind of consistently anticipated. This was a complete out of left field.
Yeah, it was. So the Fed has done an amazing job to date of telegraphing what's coming. So the market prices it in. Near as I can tell now, I don't follow the UK economy nearly as much as the US. It was a complete and utter shock. And it wasn't expected here. And again, you saw on Thursday morning, the rates changed in the US. The interest rate went up, bonds went down because it was a surprise move. They were not ready for it. So stuff got repriced immediately. Yeah. So, and again, the last thing to point out that makes our central bank different than many is the U.S. has two dual mandates: stable prices, full employment. The UK, for example, it's just stable prices, and they had a uptick in inflation. So their central bank's like, well, that's my job. I'm clearly not doing my job. Let's go bang the market. and they did. So now we get to see what breaks, and the economy just has to break. Housing has to break. It's unfortunately going to be pretty painful, I think.
Got it. And so is this a situation, let me ask you though, in the UK, they're obviously, you talk about a crash, a housing crash. The UK market is obviously in deep water. They're in trouble.
Yeah, the only hope they have is the central bank comes out and tries to create a moratorium. Maybe they're going to have to bail it out some way. They could come out and say no mortgage adjustments for 24 months. That buys time.
Got it.
But if they let things go as is, the dominoes are falling and they will only start to fall faster, and it won't be pretty.
Interesting. And so, and again, the effect to the US housing market is that we're seeing interest rate, the 30-year mortgage uptick because bonds now, because the repricing of bonds, it was a surprise. It was not anticipated. This was new, surprising news. Thus, we are right now in the temporary, we have higher rates today, and we'll probably see that kind of flow for the next couple of weeks.
Yeah, I think that's just another reason that rates are going to stay a little bit higher for longer, right? The general slow decline that I envisioned is 6% will probably be slower than will be held here a little bit longer. Yeah, I think that's well said.
Let's come back to it too, because I want to tie this together. You said something in the daily financial news too that I want to come back to on rates. Okay. We'll come back to rates after existing home sales. Let's continue. Let's talk about the Fed pause or the Fed skip. What did you see this week and your thoughts about it?
I think this is an important conversation because for the first time in the last 15 months, I am disagreeing with what the Fed is saying, which the last 15-month Ty, you were run over if you didn't listen. I realized that I'm out over my skis and I could be wrong. Right now, there's two mindsets. Near as I can tell, the market, about 60 or 65% of the market expects the Fed to skip. What is a skip? They didn't raise in June. They're going to raise in July. That's a skip. And there's a lot of talk on it. There's actually somebody I follow on Twitter, Amy Nixon. I also follow Danielle DiMartino Booth. Both of them are articulating that the Fed is executing a skip on purpose to show that they're in control and they're not going to follow past behavior. Because historically speaking, once the Fed pauses, they're done. There is a talk track both Amy and Danielle are pitching, and I think they could be right, that they're doing a skip on purpose just to shock the market. I had not thought about that, and I informed or formed a different opinion. So I want to give them full credit for their thoughts, which I now have. I am going to hold to my guns, although it's getting a little risky, in saying that the Fed is talking tough because they have to. They can't tell the market they're done because the market will rip. So they're going to talk tough right up until the July CPI reading, which I expect the headline to be 2.9 or 3. And then they're going to pause in July. And then they'll threaten again. Oh, we might raise in September. Nonsense. I don't think they're rising. Although I think most people would agree with Danielle and Amy that this is a skip and it's coming. So I wanted people to realize that I fully admit I might be on the wrong side of this one. And there may be another rate increase coming. So, yeah, it's always tough at the pivot point. So, I freely admit that Amy and Danielle might be right, and I might be wrong in this one.
Very interesting. Yeah, this is interesting, and this is a new conversation. And I appreciate that. I love the way that you look at all the different data and say, "Hey, I could be wrong. I'm still going to hold to my opinion. I still think it's going to be this, but there is this other side." You did a video with Amy, correct? You did a video with her or doing one?
I've been trying to do one with Amy. Yes, it hasn't been scheduled yet. Yeah, she's
okay.
She is a housing bear. She leans the other direction. I think she's very articulate. She's wicked smart. Yeah, it would be a very interesting conversation because I think people would be surprised that we actually agree on more stuff than people might think. Yeah. But yeah, I would love to get Amy on interview. She's done some YouTube interviews. She's part of Wealthion's crew. She talks with Nick from Reventure. So she obviously leans that way. I would love to get somebody on that side to just have a conversation. I'm not the attack kind of person, but I think getting Amy Nixon on One Rental at a Time would be amazing. And I think the audience would benefit from. So if you know Amy, Send her a note, tag her on Twitter, ask her to come on. Maybe if we get a world of people asking for it, she'll come on. Maybe she'll see this video. I don't know, but we can only try.
What is her Twitter handle?
I will get that for you in a minute. It's something like Texas Runner. Let me find it right now because I do follow her and I actually communicate with her almost every day.
Yeah, I think it would be good for a spirited debate. And I think just again, let's look at all the different angles. Let's look at all the data.
I agree. So her Twitter handle is Texas Runner DFW. She's a marathon runner. She's quite the athlete.
Beautiful. And I'm guessing she's from Dallas, Fort Worth, based on the DFW.
I know that's where she lives, but I don't know where she's from. But yeah.
Got it. Okay. Very good. Well, let's continue. So a lot going on, man. Existing home sales. What are your thoughts there? And I think you even have maybe some information to share, some screen share. So what's your thoughts?
Yeah. So we're actually going to pull it up. So this came out Thursday morning. I have not had a chance to look at it. I did my daily financial news at 7 and then 7:30 and 8:30 and just going on. So I have not actually looked at these in details, but I did load the report. So we're just going to pull out the report together and go through the summary. Cool.
I love it.
All right. So this is something that's reported. You can find it on nar.realtor.com. You could also just type in NAR existing home sales. There is a full press release, which we'll look at in a minute, but let's actually look at their summary and see what we see. Can you see that, Ty?
I can. I see the summary, May 2023.
There you go. So we're just going to scroll down. They put together the same charts. You can go back in time and look at it. But as you can see, existing home sales came in at 4.3 million. You can see it's a very small uptick. This is important because last month, I think, was 4.28. The forecast was for 4.23. I guessed 4.33. So I guessed above last month and above the experts. And we'll call it a tie.
Real quick though, let me interrupt you only because I want you, for the audience that goes, okay, and this is legit. I know some people are going 4.33. That's how many sales were in the month of May. No, explain what the trend line, explain what this actually, what is this? And just for somebody, if they're brand new watching for the first time.
Great point. We should definitely do that more often. So this is what they call an annualized number. So basically take the number of transactions in the month of May and times 12. Right. So they're doing the monthly number times 12. And again, why is this important? This chart is the housing crash. This is what we called on this channel. People can go back to Your and I playlist and they could go, when the market was up here at 6.3, we were calling a housing crash. It just wasn't in price. So you and I don't get any press for that. But we were right. The market is down 40%. The other thing that we called is I called the bottom here at 4.02 million. Now, there are some calls that this year we may go below that, 3.938. I'm going to stick to my guns that we bottomed at 4 million. But yeah, this is a track. This is the crash. This is interest rate lock-in. This is nobody wants to move up. There's no buys and sells. It's tough to be an agent, right? It's a lot easier to cash commission checks up here at 6.3 than it is at 4.3, right? That's 40% less commission checks.
Let me ask you, let me just real quick, just because we're looking at this chart too. I want to just compare to what were your thoughts on, if you look at back in 2020,
sure.
And you see that 4 million, just right at a hair, 4,090,000 right there. What, just your thoughts? Was that COVID? Was that right?
That was absolutely COVID. We shut down the economy. Remember when real estate agents couldn't show open houses? They couldn't meet clients. They couldn't do all this. We had 1 month where it just bam. And then
we thought it was over. We thought the whole world shut down and we thought, okay. And then they did what did they call essential?
Yeah, exactly.
And then we got kind of not back to normal, but back into like unicorn territory.
Exactly. Okay. Yeah, no, I think we just got back to normal and then interest rates get down and then all bananas went nuts. Then it just got nuts.
Okay. Love it.
Okay.
So what are your thoughts going forward? Keep going.
Yeah. So again, going forward, I think we're going to be between 4.1 and 4.4 annualized number. It's just, and again, and unfortunately, if you're a real estate agent, I don't think it gets better in 24. Right? I think the housing market's broken. The Fed broke housing. I've been saying that for a year. It's not getting any better. So next up, we have home prices. Depending on how you want to look at it, I look at year on year. Home prices are down 3%. We will see that in a minute. Lots of people look at month on month. You can clearly see the spring selling season coming back. But again, that's median. This is median existing home sales. Then you have price changes. This again is what I look at, generally speaking, year on year. You can see that we are getting increasingly large numbers. More importantly, this is exactly what I called it. In January 2nd, I put out a call that said we're going to have 3 to 4 negative year-on-year numbers, because if you don't remember, 2022 Q1, Q2 was unhealthy. We had record low inventory and people were doing, 20, 30, 40K over ask. We just got to pay that back. So I do expect this to turn around in June, meaning being less negative, but we shall see going forward. But yes, year on year is clearly down and frankly getting worse. Now we have percentage change in transactions. This is the housing crash. The people that have been screaming housing crash and prices are wrong. This is a crash. I would argue we're still in a crash. We're still down 20%. Anything more than 20% is a crash in my book. And we're still there. We've been there for, wow, we've been there since, last year, almost a full year. We've been in a crash. And again, I don't see it getting better. Although starting in, I guess that's July, maybe even next month, June, the comparables get easier, right? Because you'll start comparing to these numbers. So we won't be 33% down again in, I don't know what month that is, December, because we'll be comparing to a much smaller number. This is comparing to December of 21. In a few months, we'll be comparing to 22. So the compares will get easier.
Interesting. Yep, totally.
So this is always interesting. How many times have you heard no first-time buyers can buy homes? Millennials are priced out. I hear about it all the day. I had some negative Nancy I blocked on Twitter because he was an idiot for being just rude this morning. But it looks like first-time home buyers are up. They're buying 28% of all the homes versus last year of 27%. Sales to investors are down, right? Some people are saying the institutional investors are down. I'm thinking mom and dad are just doing better work. They only get cash flow. It's tough today. Cash sales, man, look at that. 1 in 4, Ty. 1 in 4 sales are cash. Still a lot of money sloshing around. I can look for the doomers. The doomers can correctly say that distressed sales doubled. Ty, distressed sales are up 100%. They went from 1 to 2%. And then lastly, days on market is up 2 days. So,
oh man, up 100%. The distressed sales,
technically
crazy.
accurate. It's technically accurate. That's what happens when you use percentages. So existing home sales, again, this is just a pie chart. You can go back. It really doesn't mean anything unless you compare it to months and months. And that's not something I do regularly. So I look at that. Then I come down to look at price ranges where most of the sales, again, between 100 and 500 makes up roughly 65% of the sales. Only 7%, I think, are over $1 million, if I read that right.
Yep.
Yeah, 7%. And then only 7%. So again, luxury market's still pretty slow. And I think they have one more chart, if I remember. It's a bar chart. Yep, here it is. So again, transactions by price range, which I think is interesting. They call it sales, but I always just say the word transactions. Basically, the higher the price, the slower the transactions. This is kind of the luxury market on pause, as I've been talking about.
Spot on, man. Spot on.
And then last thing I did, there was a press release. Usually they have a quick summary. So let's do the full thing and look at the press release real quick. Again, yeah, they do the highlights. Inventory. That's interesting. That wasn't in their graph. Unsold inventory was up 3.8% to just over 1 million listings. And here's one I thought was interesting. I think you and I talked about this once. What could create inventory?
Yep.
So they just said what we said. It's all funny. They must be watching our channel. A temporary capital gains tax reduction or pause would cause sale of investment properties, boosting inventory. Remember having that discussion?
Yes, sir.
That's funny.
Let's do it.
Yeah. So again, that's the existing home sales. I think it's pretty interesting to look at. I do think transactions have bottomed. So, but when I say bottom, it's not like we're going to bounce back. They're just going to be on this plateau for a while. I do think new home sales are going to continue to rock and roll. We got a report from KB Home yesterday, beat top, beat bottom, which means beat earnings, beat revenue. And they're killing it right now. So a lot of interesting stuff going on.
But let's go back. I want to just go back to, by the way, thank you. What was great too for the viewer at home, I want to encourage you. Michael, not only did he just show you the data, but he showed you how to find the data, how to read the data, how to look at the data, how basically that data he interprets into the show notes right there. He didn't just tell us about it, but he actually showed us how he finds some of the research, some of those tools and things. So thank you for that, Michael. I want to go back to the interest rate, and I want to go to something you said today on the Daily Financial News, which I think is really important. Because of this little hiccup in the UK, or maybe it's a much bigger than a hiccup.
Yeah.
Rates obviously are ticking up.
Mm-hmm.
Originally, I would feel like maybe the last 2 or 3 months we were calling for interest rates to be 6% or sub 6 by the end of summer.
Mm-hmm.
Now, today, I know you mentioned something about Mortgage Bankers Association saying that maybe rates of like, 5.88, 5.9, 5.9 by the end of the year. What are your thoughts now today about what happens with the 30-year mortgage?
Yeah. So I again, it's a very complex world out there.
Sure.
And surprises happen. So I still believe that rates, generally speaking, trend lower from here. That assumes a couple of things. One, inflation in the US comes down as I expected. Two, the Fed pauses as I expect. Both of those things I could be wrong on. And then the biggest thing is if we do get a pause, it's the collapse in the spread. The spread is still 313 basis points.
Yeah.
Historically, it's been 180. So clearly there is room for it to come in, but we've got to get past the shocks. So do I think rates sub 6 by the end of August is possible? Yes. Likely? No. Do I still think 6% by the end of the year is possible? Yes. Do I think it's likely? Yes. So maybe the timeline has been extended. But I don't see any reason, because I think the economy is slower. I think the battle against inflation will be noticeably different 3 or 4 months from now. Yeah, so those are generally my thoughts. Yes.
Got it. And so again, I think folks that the trend is stability, right? So if we see stability, which we believe we're at the terminal rate, the Fed's going to pause, and I think that makes sense. They're talking about a skip. Maybe they do rate increase.
Yep.
That could shift and maybe extend this, but ultimately the trend is that we're going to see the 30-year mortgage begin to trend downward. Maybe it's the end of the third quarter. Maybe it's sometime in the fourth quarter. By the end of the year, we should see interest rates 6% or even sub 6. Is that pretty accurate?
Yeah, I'll call it 6. I don't know if I want to talk sub 6, but 6, yes.
Got it. Okay. Very good. Very good. I like it. So let's finish on a high note.
Yeah.
Patrick Bet David, somebody we both follow, we both admire. I know, love his content, love what he's doing. What happened with Patrick this week?
Yeah, so Patrick Bet David, if you've been following him like I have and you have, it's been teasing us that some life-changing event was about to happen. Yeah. And I assumed he was buying a building. He was buying a business. I think it would be, maybe he's going to go on TV. He's going to have his own TV show. These are all things that I thought he was leading to, right? Because I always like to try to predict the future. And boy, was I wrong. It turns out that Patrick Bet David, PBD, is now a minority owner of the New York Yankees.
Yeah.
That was not on my bingo card. I would not have gone there. Good for him. Again, if you know his story, he is a rabid fan of sports cards, right? He owns some like Babe Ruths or Mickey Mantles or something. He bought like Wayne Gretzky. He's like he's in the game, right? So he's now a minority owner in the New York Yankees. And again, I think it's a show of the American dream.
Yes.
Go back and listen to his early stories, right? He talks about just the struggle of coming here with nothing and just getting after it. And I mean, there's probably no more well-known sports team than the New York Yankees, right? So I'm happy for him. Clearly he's happy, so I'm happy for him. So good for him.
Absolute legacy piece. And again, if you know Patrick Bet David, I know a lot of you do, but I would say what a legacy piece of a guy who comes here when he's like, I believe he's like 9 or 10 years old as a refugee, right? Bounces around, is like at a refugee camp in Germany, if I'm not mistaken, ends up in LA, joins the army, serves our country, right? Not even born here, serves our US Army, right? Falls in love with the American dream, and a guy who literally from nothing becomes a stockbroker, right?
Yeah.
He was a stockbroker in 2008 or 2007, 8 when the whole market
when it rolled
collapsed.
over, when it blew up. Yeah.
So
crazy.
for him to go out and reinvent himself, get himself into securities, insurance, sell that company, all the great things he's doing, man, our hat, man, God bless America. God bless Patrick Bet David. What an awesome story, man.
Yeah. And again, he's still giving back today. I mean, he's doing a lot of things today to give back. And yeah, it's quite the accomplishment. Good for him. Good for him.
So cool. So something you mentioned, we're going to finish off. So the course, I think you have an expiration or something, some bonuses and things.
Yep.
They can go to onerentalataTime.com to buy the course.
Yep.
If nothing else, go check out the newly rebuilt $8,000 website.
Yeah.
Tell them about it.
Yeah. So go to One Rental at a Time. Check it out. I built the website for one reason only, and that is because of the millionaires like Ty that come back and give each week. I did not represent them well in the original. So do me a favor, go check it out. One Rental at a Time. There's a button that says Meet the Millionaires. Just go realize how many contributors we have to my channel and thank them. They give their bios and links and all of that. So if nothing else, go there. But yes, on my travel, I did do a special for my course, which I never do. I have a course called How to Get Started One Rental at a Time at $3.99. If you buy that course today, it's only one more day because when I'm done, when I'm back home, this doesn't exist anymore, and I'm going back tomorrow. You can get 2 free $50 courses. You can get my 6-hour mastermind. You can get my buy box deep dive. You can get anything you want for 2 free courses for free. Then Ty has been pushing me to raise the mentoring option, which I am doing. I'm going to raise it to $9.99. I'm doing a couple of things because I got to do it my way. First, if you bought my course, that option, I'm going to grandfather what I'm about to say in. So I personally have to manually do what I'm about to say. So the idea is I'm going to raise the course to $9.99 on July 1st. And what I will be doing there is if you buy that and you get the 30-minute option, I will give you all of my free $50 courses. So you will get $400 in value for free. I figure if you're going to buy the mentor option, you might as well have everything I've created. So again, I will give that if you've already bought it. But if you buy it today, you actually got 7 days where you can actually get all of that for the wild price of $7.99. Yep. So $7.99 minus $400, it's just a crazy deal. Then both of those gets you in the free course. So I'm doing something that you've asked me to do, you've pushed, you've suggested. I'm just doing it my way, and I think it's a happy medium.
I love it. I love it. So folks, go to onerentalataTime.com. If nothing else, check out the website, give Michael some feedback. What do you like about? There's so many good book recommendations from all of the experts, all the millionaires, everybody that's a part of the channel. Michael, thank you for all that you do. Have a great weekend.
You too, bud. Take care.